All right, future titans of finance, welcome back to Alpha Index. Today, we're not just defining terms, we're building the very foundations of your financial wisdom. We're diving deep into the language of the markets, transforming abstract concepts into actionable insights. Get ready to unlock the secrets of investing, one powerful idea at a time. The genesis of ownership. Every grand empire, every groundbreaking innovation begins with a spark. In the financial world, that spark is ownership. When you buy a stock, you're not just buying a piece of paper, you're acquiring a fractional ownership in a living, breathing entity, a company. Think of it. You, as a shareholder, become a co-owner, a silent partner in the journey of giants like Apple or Google, or perhaps a burgeoning startup aiming to be the next big thing right here from Lawrence, Kansas. Each unit of this ownership is called a share. Owning a share means you have a claim on the company's assets and earnings. It's a profound concept, a democratic distribution of economic power. The stage for this grand exchange is the stock exchange, a bustling, dynamic marketplace, albeit mostly digital today. It's where the collective hopes and fears of millions coalesce into prices. It's the beating heart of capitalism, a place where dreams are funded and fortunes are made and lost. But what kind of company can you own? A public company is one whose ownership is carved into these tradable shares, readily available for anyone to buy or sell. This transparency and accessibility are its defining features, allowing companies to raise vast amounts of capital and individual investors to participate in their growth stories. The market's metaphors. Beasts. Bubbles. The market speaks in metaphors, often drawn from the animal kingdom. A bull market signifies optimism, growth, and rising prices. Imagine a bull charging, horns thrusting upwards. That's the market's trajectory. Conversely, a bear market embodies pessimism, decline, and falling prices. Picture a bear swiping downwards with its paws. That's the market retreating. These aren't just colorful terms. They describe fundamental psychological shifts that drive economic cycles. The market also dances to its own rhythm, sometimes wildly, sometimes serenely. This erratic movement is volatility, how rapidly prices fluctuate. High volatility can be exhilarating for some, terrifying for others. It's the ocean's tempest, full of both danger and opportunity. And what fuels these movements? Volume, the sheer number of shares traded daily. High volume often indicates strong conviction behind price movements, like a roaring crowd amplifying the market's voice. At the heart of all this lies capital. It's more than just money. It's anything that generates value for its owners. From the cash in a venture capitalist's bank account to the intellectual property of a groundbreaking patent, capital is the lifeblood of economic activity. It's the seed from which all financial growth sprouts. And then there's liquidity, how easily and quickly you can convert your investments into cash without significantly affecting their price. Imagine trying to sell a rare painting versus selling shares of a major company. The painting might take months, the shares, seconds. High liquidity, often tied to high volume, offers freedom and flexibility to investors. But beware the mirage of a bubble. These occur when optimism inflates an asset's price far beyond its intrinsic value. It's a collective delusion, a feverish pursuit, where fear of missing out overrides rational judgment. Like all bubbles, they eventually burst, leaving behind a trail of dramatically falling prices and sobered investors. Understanding bubbles is crucial. It's about discerning genuine value from speculative euphoria. Milestones, mechanisms. How does a private dream become a public phenomenon? Through an IPO or initial public offering? This is the grand debut, the moment a private company offers its shares to the public for the first time, seeking to raise substantial funds for expansion, innovation, or debt reduction. It's a transformative step, marking a company's transition from a private endeavor to a public trust. Once public, companies sometimes share their successes directly with shareholders through dividends. These are portions of the company's earnings paid out, a tangible reward for your faith and investment. Not all companies pay them, especially growth-focused ones that prefer to reinvest earnings. But for many, dividends are a steady stream of income. Some companies, however, stand as titans, their names synonymous with stability and reliability. These are the blue-chip stocks, established giants with a long history of solid performance and often consistent dividends. Investing in blue chips is often seen as a cornerstone of a stable portfolio, akin to building with the strongest bricks. Beyond stocks, the world of finance offers other avenues. Forex, or foreign exchange, is the colossal global marketplace where currencies are traded. It's a fascinating, complex arena where geopolitical events, economic policies, and speculative trading all converge to determine the value of one currency against another. Your personal collection of these diverse financial instruments forms your portfolio. It's a carefully curated garden of investments, reflecting your goals, risk tolerance, and vision. The individual components within that garden are your holdings. And what fuels many of these financial relationships? Interest. When you lend money, be it to a company or a government, the cost of that loan, the extra cash returned to the lender, is interest. This principle underpins everything from bank savings to bonds. A bond is essentially a loan an investor gives to a company or government, and in return, the investor receives regular interest payments. It's a less volatile, often more predictable way to earn returns than stocks. Stocks, bonds, and other tradable financial instruments are collectively known as securities. These are the bedrock of modern finance, the assets that are bought, sold, and exchanged every second of every trading day. Finally, navigating this intricate world often requires a guide. That's where a broker comes in. Since direct access to stock exchanges is typically reserved for institutional players, brokers act as intermediaries, executing trades on your behalf, usually for a fee. Today, most brokers are online platforms, democratizing access to global markets from your home in Lawrence or anywhere else, charting your course. So, whether you're envisioning a robust portfolio of blue-chip stocks, exploring the dynamic world of Forex, or carefully selecting bonds, remember these foundational concepts are your compass. They're not just definitions. They are the intellectual tools that empower you to navigate the exciting and ever-evolving landscape of investing. Now, if you found this deep dive into financial wisdom enlightening, show some love. Hit that like button, share this video with anyone eager to learn, and most importantly, subscribe to Alpha Index for more insights that will elevate your financial game. Until next time, keep learning, keep growing, and keep conquering those markets.